Could this be a sign that something much bigger is brewing beneath the surface? Stick around, because by the end of this video, you'll understand why the biggest KAS wallets are betting harder than ever. And why this could be one of the most overlooked opportunities in crypto right now. Welcome back to TJ Crypto World, the place where smart investors tune in for real analysis, on-chain insights, and strategies built for conviction, not hype. If you're tired of recycled crypto chatter and want to understand what's really going on behind the charts, you're in the right spot. In today's video, we're breaking down Kaspa's major drop from its 2024 highs, the surprising wallet activity among the top 10%, and what it all means for the future of KAS price action. Trust me, you'll want to watch this one till the end. Because while the charts look shaky, the whales are sending a very different message. Before we dive deep, make sure to hit that like button, subscribe, and turn on notifications so you never miss a moment that could change your crypto strategy forever. Here's what we're covering: the reality behind Kaspa's 65% decline from its August peak. How the top wallets are accumulating regardless of price action. The psychology behind whale behavior during dips. What it means when holders stop thinking in dollars and start thinking in Kaspa. And why this silent accumulation could be setting the stage for a major long-term breakout. Let's dive in. Kaspa's brutal decline, and why it's not scaring everyone. Kaspa has had a tough few months. After peaking in August 2024, KAS has plunged over 65%, returning to levels that many retail traders didn't expect to see again this year. On the surface, it's easy to assume that investor confidence is broken. But behind the scenes, a very different story is unfolding. Whale activity, accumulation during the storm. According to a recent update from Kaspa Report on X, the top 10% of Kaspa wallets have been steadily increasing their holdings for 3 straight months. What's fascinating is that this accumulation trend has continued regardless of price volatility. Whether KAS was pumping or dumping, the largest holders have kept stacking. This tells us one thing clearly: they're not timing the bottom. They're building a position. What makes this significant? It's not just that these wallets are adding more tokens. It's how they're doing it. They're outpacing the rate of new KAS emissions, which means they're actively buying more than what's naturally entering circulation. This isn't passive staking. It's deliberate accumulation. So why are they doing this? One theory is dollar cost averaging, DCA, a strategy where investors buy fixed amounts over time, smoothing out volatility and lowering their average entry price. But there's a deeper layer here. According to Kaspa Report, some of these wallet behaviors suggest that holders are no longer thinking in terms of fiat value. They've switched their mental model. They're not asking, how much is my KAS worth in dollars? They're thinking, how much KAS do I control? That mindset shift is massive. It signals belief. Vision. A commitment to Kaspa not just as a trade, but as a monetary system in the making. Accumulation and scarcity, a powerful combo. Here's where it gets interesting from a market mechanics standpoint. As these whales continue to soak up supply, the amount of KAS available on exchanges drops. Less circulating supply means fewer tokens to satisfy demand once sentiment flips bullish. So even if we're not seeing price appreciation now, the groundwork for supply shock is being laid. And when retail flows back in, as they always do, the price response could be explosive. This is exactly what happened in early 2023. Let's not forget, Kaspa has seen this before. In early 2023, large wallets began accumulating aggressively during a prolonged dip. At the time, it looked like stagnation. But within months, KAS exploded to new highs. Could history be repeating itself? The psychology of deep conviction. The most important takeaway from this pattern isn't technical, it's psychological. The biggest holders aren't trading emotion. They're trading strategy. They're betting on Kaspa's architecture, scalability, and long-term utility, not just a pump. That Kaspa is more than a coin. It's infrastructure. A decentralized framework that could rival or even replace legacy monetary systems. And their actions reflect that belief. If you've made it this far, you clearly care about making smarter crypto decisions. So hit that like button, subscribe, and drop a comment below. Are you stacking KAS or sitting on the sidelines? Let's get a conversation going. Why it matters now. What we're witnessing right now isn't just whale activity, it's a message. While retail traders react to price, long-term holders are reacting to opportunity. And they're showing us what conviction looks like during chaos. Even in a market full of red candles, this kind of strategic accumulation often marks the bottom. not the top. Kaspa is playing the long game. The analysts behind the Kaspa Report summed it up perfectly. Kaspa may not just be another coin, it could be a foundational shift in decentralized money. A system built for speed, fairness, and scale. And if that vision is even half right, those accumulating now might look brilliant in hindsight. So what's your move? Will you follow the fear, or watch what the smart money is doing? Thanks for tuning into TJ Crypto World. If this breakdown helped you see the bigger picture behind Kaspa's recent dip, hit that like button, subscribe, and ring that notification bell so you don't miss what's next. And if you want more deep dive content, check out my next video where we explore the altcoins gaining traction while the rest of the market sleeps. Until next time, stay sharp, think long term, and I'll see you in the next one.